Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the 19th day of May, 2014, and this is the daily report for gold and silver. After trading to a high of $13.06 in overnight trading, it was up in double digits, over $10. We have the market in essence unchanged to up $1, down $1. That's the latest trading range we have seen. You can see currently trading call at 13.93, the low 92, so just off of the lows right now, and then 13.0660 on the high side. Silver trading in essence unchanged also today. Current print 33. The low has been 1925, the high 1977. As you can see on this weekly chart, we have seen this market consistently move down, making lower lows up until the last 2 weeks, in which we've had in essence unchanged. More on silver towards the end of the show. We're going to start today's show by looking at a 480-minute chart. This chart is in Japanese average format. I have adjusted the compression triangle really more than anything else is this upper line, in that I'm not going from this high here and down, because if we do, as you can see, it gives us a longer read, but it doesn't account for these latest tops here. And the one thing that we can see when we look at it in this way is as follows. First of all, we're absolutely at our support line, and it's a critical level of support to hold. That would be this bottom line here, and it's really drawn based upon these lows here. And as you can see, I'm putting them really closer to the body than I am the tail, so that I can reflect really the true range, upper level in here. And we are absolutely back to the bottom of this range right now. As I said, it was up about $10 in trading overseas. Of course, we had an election in India, and the perception right now is that the tariffs that have been plaguing physical purchases of gold in India could be removed. We'll see how that affects the market, if at all. On a technical basis, we are at this real critical level. So I've gone ahead, converted this back into a standard Japanese candlestick chart, not the average chart. And what we're looking at right now is really the dynamics of the trading that we've witnessed, of course. This is those highs today at around 13.06. These came in overnight. And then ever since that, the market comes down, finds a little bit of support right below 1300, as you can see with these green candles here. This, of course, is 480 minutes. And then as it hits these lows right in here, you can see that it kind of bounced off. We've got this little green candle forming. The candle right now is just beginning to trade, and that's this one here. So it does appear, at least on a tentative basis, that we have, in fact, found some support. But as I said, this to me is a pretty critical area. It absolutely needs to hold that if we are to see this market move back up and to the upper resistance line, as opposed to threatening the support line down here. So traders, the daily chart says it all, and that's what we're looking at here. As you can see, it's already starting to form a candle because we've gone past the New York close, and that's where that fix comes in. And so you can see this small candle that is just beginning to form, and that, of course, is right here. Now, the candle prior to that, which is the daily candle of today's action, Monday, is this long-legged doji. And so when we look at this candle itself, let's go to a line tool so I can try to create that for you. What you see is this. We've got a pretty decent range here. So I'm just going to try to make it as straight as possible. And if you see where the open and close at, it's towards the bottom, just off of the lows of the range. So it looks something like this. And this doji itself, this type of doji, realize there are a number of different types: a Tombow doji, a gravestone doji, a rickshaw man. It is the fact that we've had such a dynamic range, and it closed very, very much near the open, which is significant. The fact that it closed near the lows to me is also fairly significant. But when we take it in context of what we have been looking at, you know, over the weekend, I tried to ascertain whether what we're witnessing with this narrow range, is this the quiet before the storm, or the quiet before the quiet, because we haven't really seen any kind of real action and dynamic range in the market or defined trend in the market for the better part of the last 2 to 3 weeks, as you can see on this daily chart. Ever since this market, we first touched, this is the 1330 area, then we came down, we had a lower high, and this next set of highs were also lower. In the same way, we're getting our low here, a higher low here, higher low here, and if this holds, a higher low here. So we're continuing to move in the compression itself because we continue to narrow the range by these series of highs going lower and these series of lows going higher. But we've not seen any kind of action right now that's indicative of a market that wants to break and break above or below the trading range. So we'll definitely have to see how it unfolds. But as I said, this is really the tell of the tape in terms of the fact that we do have the range continuing to narrow. And we had a pretty dynamic range today when we consider it was about a $20 range. And this entire narrow range has been about $30. So it encompassed a good percentage of that range. Also, when we take a look at the 2-day chart, and that's what we're looking at right now, this does have our Andrews pitchfork in it. But to me, the most significant characteristic of the market as we look at it through the daily chart, as we look at it through a 2-day chart, is this dramatic support level that it's had, the inability to break below it, but also the inability to break above this upper level of support resistance, and as this market moves towards the crossroad, which would be right of here, of course, the question is whether or not we will see that market break above and form some sort of dynamic breakout, because right now we haven't seen the indication. We've got this sideways market. It continues, and no matter really what kind of chart we look at it, that is the overall characteristic of the market. We're trading sideways. We haven't seen this kind of action in a long time. Now, as I pointed out a little bit on Friday, I have seen areas where you get a real strong congestion right in here. This comes just prior to the breakout. So it is possible, and there's no doubt when we look at this, you had a marketplace that was dynamic also in terms of the range kept compressing, and then you had the breakout. So it's something that's still within the cards, although we're getting near the bottom of the deck. And that's why I say, is this the quiet before the storm or the quiet before the quiet? Because this market's not going to maintain itself at this level, and I do believe it's going to break. And the question is, which way is it going to break? Right now, we're finding support and resistance at such a narrow range, we're not really getting any solid information on a technical basis. Now, we're still within the guidelines. We haven't done any major bearish damage in the marketplace. There's no doubt about that. 2-week chart, you can see here for the better part of a month, we've had this very dynamic range. There are those analysts out there that believe that this is just a seasonal tendency in gold, and it typically will bottom out in June before moving up. We will have to see how that unfolds, but we're certainly getting this market trading in a very quiet way. But when I go back to historical points in the same time period, whether it's 2013 or 2011, 2012, except for one particular area, and that is this area right here, we haven't seen that kind of sideways action. We did get that right here. And in fact, what we can do, just so that we can ascertain exactly when that came due, is go ahead and change our pointer. And so here's June. So you can see right in here that we had a quiet activity back in 2013. So if anything, in terms of seasonal comparison, last year we did get quiet, and it was quiet before the storm. Now to silver, we're looking at our weekly chart, and it is in Japanese average format, but we've had these series of, on a weekly chart, lower highs, lower lows, all the way down up until the last 2 weeks. Here we actually had our lows come in just above this low that was hit here roughly 1 month ago, 1, 2, 3, 4 candles ago. We have had a higher high last week and a lower low. Of course, this is just starting. But as I said, my concern with silver more than anything else is Unlike gold, which has broken through that long-standing resistance line, silver never really did. And until we can see a break above this particular resistance line, which is still considerably away, it's up around $20 per ounce, I cannot really get bullish on this market. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.